Are you tired of slippage eating away at your crypto gains? Money with wings. When you're trading on an exchange, two of the most critical factors you need to consider are trading volume and liquidity. For Canadian crypto users, Newton is a major player, but how does it stack up on these essential metrics? Let's dive in and break down what Newton's volume and liquidity actually mean for your portfolio. Understanding the key metrics. First, let's define our terms. Trading volume is the total value of assets traded on an exchange over a specific period, like 24 hours. Think of it as the market's activity level. High volume is a strong indicator of interest and a healthy market. For the Newton Protocol token, NEWT, the 24-hour trading volume has recently been reported in the range of $10 million to $20 million US. This is a solid, active volume for an asset of its market size. Now, on to liquidity. Liquidity is how easily and quickly you can buy or sell a crypto asset without causing a significant change to its price. This is what prevents the dreaded slippage. Liquidity is tied to volume. Higher volume generally means higher liquidity. Newton's liquidity advantage. Newton's strategy is built around offering tight spreads, which is the difference between the highest price a buyer is willing to pay and the lowest price a seller is willing to accept. Tight spreads are a direct result of deep liquidity. Newton publicly emphasizes its access to deep liquidity by partnering with multiple trusted counterparties and acting as a market maker itself. This sophisticated market-making operation allows them to source the best prices and minimize the bid-ask spread, ultimately reducing the effective trading cost for you, the user. For Canadian users, this deep liquidity is particularly important. A high liquidity platform means you can execute larger trades without drastically impacting the price, and you get closer to the real market rate, especially when dealing with major assets like Bitcoin and Ethereum. They even offer an over-the-counter, OTC, desk for trades over $30,000, specifically providing access to this deep liquidity and best-in-class pricing for high-net-worth individuals and corporate clients. What this means for you. So, what's the takeaway for the everyday trader? Lower cost. The tight spreads, driven by high liquidity, translate directly to a lower effective trading cost, even on a platform that advertises no trading fees, as the cost is built into the spread. Better execution. You are more likely to have your buy and sell orders filled immediately and at the price you expect, reducing the risk of slippage during volatile periods. Market health. The consistent trading volume, particularly for the Newton Protocol token, suggests a stable and engaged community around the platform's native assets. When choosing a crypto exchange, always look beyond the fee schedule. The trading volume and liquidity determine how efficiently and cheaply you can actually move your money. For Newton, its focus on sourcing deep liquidity is a key differentiator in the competitive Canadian market. With that said, thanks for watching, and until next time.